Hey everybody, welcome back to AskAVC. My name is Ryan Floyd. I'm a partner at Storm Ventures, and I'm here with my partner Pascale as well. Storm is an early stage B2B SaaS venture fund where we invest in companies that are just starting to emerge from product market fit, and we try to help them figure out their go-to-market motion. On this channel, we try to give you advice and thoughts as if we were on your board or an investor in your company. Today, since I have my partner Pascale with me, we're going to pull back the curtain a little bit on Storm and talk a little bit about how we think about making decisions, what the process is like, and some things that may not be obvious to you as entrepreneurs and founders when you interact with a firm like Storm. All right, so first, let Pascale tell you her story because it's really interesting. She joined us about 5 years ago, and then we'll talk a little bit more about our process.
Hey everybody, my name is Pascale Diaine. As Ryan mentioned, I joined Storm Ventures 5 years ago. I have an accent, you probably heard it. I was born in France, grew up in France, got in a small town in the north of France called Lille. And I got my master's degree in France and ended up doing my internship in the US, in Silicon Valley, working for a European telco called Orange. And they have an innovation center in San Francisco, and I kind of built my career there until I built an accelerator of Orange called Orange Fab in 2013. And a bunch of startups went through my accelerator, and some of them got funding through Storm Ventures. One of them is called Talkdesk. And basically that kind of got us to talk, and Storm Venture mentioned that they would love to have me join the team. And it was an interesting process to get to know the VC world and this kind of mysterious world where it's always kind of unclear what's happening behind closed doors. So we'd love to tell you more.
Not on purpose, but it is. It's a little mysterious.
So yeah, we'd love to tell you more. What's happening after you got your first meeting with the VC? What are we talking about? Why are we asking you all these questions?
And I also wanted to have Pascale on today because she's going to be co-hosting some of these AskAVC episodes in the future. So this is a great way for you all to get to know her and Storm, and a great way to kick that off. So I think, probably first, like the process, we get asked the question all the time, how does it work? How do we make decisions?
How long does it take to get to a term sheet?
How long does it take, to a term sheet? And I always struggle because I want to get the question of how long does it take to get a term sheet? Let's start with that. I always struggle because I'd love to give a really crisp answer and say, it's going to take 6 days and this is exactly the 4 things that we need to do. But unfortunately, it always feels like I can't give a crisp answer because you don't really know, because it depends on
the entrepreneur.
On
how quickly they make introductions, how clean is the material they give us. So it's kind of a two-way street kind of
right
thing. Yeah.
Yeah, and my default on that, and I would tell every founder entrepreneur what they should do, is just expect transparency. So what I try to do, even though I can't predict how long it's going to take, is at least just say, you can always ask me how long or where we are in the process, what am I thinking, so that people can I try to check in and always reveal kind of where we are. And that I can promise people. I can always tell people exactly what I'm thinking, but rather than giving it a strict, timeline in terms of what's going on. And what you said is right. Just the material that people give us, it's all over the map sometimes.
Yeah.
That may require us to do more work to figure something out.
Yeah, and sometimes it relies on other people. We need to do customer calls, reference calls, how available are going to be these people, these customers, these ex-mentors you're going to refer us to when we're trying to understand a bit more who you are.
Yeah, the customer calls, maybe that's a good one to just go a little deeper on, because I think founders get nervous all the time about, how we're going to reference, why we want to do customer calls. From our standpoint at Storm, and I can't represent all venture firms, so we'll just talk about Storm. The sole reason we want to talk to customers is really, I guess two reasons. One is we just want to, understand why they buy, what the value is, and really try to see it through their eyes. But we're not trying to ask them dirt on the company or have there ever been any issues. We're not trying to throw you under the bus with the customer, because we really respect the fact that it's hard to get customers. And so we want to be respectful of that. And from a reputation standpoint, it would just be terrible if we, said things that were negative or whatever in those customer calls. So that's really, those are the reasons we're really trying to talk to customers and understand more. And we also really try to validate outside of their customer base, right? With people in our network, because all we do is B2B SaaS. So we know lots of people we can talk to usually about any given solution.
Absolutely. So whatever logos you're going to put in your deck with customers, existing customers, and you're going to introduce us to 2 of them, expect us to maybe try to talk to other customers on the list you did not introduce us to, but that we know. And that's fair game. We're trying to understand really what is the value the customer are finding, and the good and the bad customer. And we understand some customers might not be as happy as others, but it's important for us to really fully understand the value they get, the use case they are using your product for, and how they think about ROI. It's very important for us because that ROI is really what's going to determine the future of the business of the company.
And by getting a hold of people that we know rather than introductions that a founder has to make, it saves you from having to burn equity to make those introductions, so that we can kind of use our own equity with the customers and the people that we know to help understand the story. And that also made me think, and this is a constant kind of discussion internally at Storm, is like, when is it appropriate to call customers? I would tell you as a founder, if after a first meeting with a venture investor, they ask for your customer list and want to call your customers, you should just run the other direction. Because it's inappropriate. They're not at a point yet that it really makes sense, at least I think, to be calling your customer base. There's so much work that Pascale and I and our team would do just to prepare to have those customer calls to make them meaningful. After a first meeting, we're just not ready, right? And I think I don't think there's anything nefarious when venture investors maybe ask for that, but I wouldn't put the burden on your customers to teach us about the business. That's something that we need to figure out how to do our own, with you as a founder and with our own network, right?
I would say, so if we take a step back and, you get your first meeting with a VC, what are we going to ask usually? We're going to ask, I usually want to ask financials, high level financials. I'm not trying to get all the details, but like, we need enough to get the growth rates, kind of like really understanding if the direction of the company is the right one, if we get excited. If the financials gets us excited, then we will dig deeper. Maybe have you talked to somebody in our network, like somebody who knows the space better than we do,
right?
To get that,
right?
So, financials, call with an expert. If that all adds up, maybe have the entrepreneur talk to the partnership.
Yep.
So you will be on a Monday, usually a Monday. You're going to be asked to talk to the rest of the team because, again, taking a step back. Our role as a VC, like, we're not making decisions on our own. We're a team of 4 or 5.
Right.
And our role, if we love your company, is to convince the rest of the team that your company is amazing. So that's why that process happens. Like, we want you to talk to the rest of the company. We already pitched you to the rest of the partnership, telling everybody how much we love your business and we believe in it and we think we should dig deeper. But now we want them to be convinced too. So there's a high chance that if you talk to me and I want to introduce you to partnership, I'm going to coach you through that process. But you have to talk to the rest of the partnership. Usually it's hard to get a term sheet without that step.
Yeah, in our case. And that's probably true of most venture funds. Yeah. I mean, and I think, just to go back to what you said about the financials, what gets us excited? The answer to that question is going to be different depending on which venture firm you're talking to. I mean, in our case, we're investing typically in companies that have $500,000 to $1 million of ARR and are growing. And it's sort of like a baseline expectation in terms of the companies that we're looking to invest in. And it's nothing to say that if you don't have that, you don't have a phenomenal potential for your business. It's just not in our strategy in terms of what we're trying to do, as a fund. So, we want to see some of that up front. And, I've put out videos on this before, you will find investors, they want to hear a story, they want to understand the product, but investors are also, financially minded. I mean, it's our job, it's what we do. So, if you do have a good business that you can represent with customers and revenue, it really makes sense to put a thoughtful set of financials together, whether it's in your deck or separately, because I've just found generally that's a really quick way to get people excited about your business, especially as Pascale just said, when it comes to a broader partnership, right? Because when you're going to present in front of, if I get excited about a company and I've spent a bunch of time understanding the opportunity and the founders, hours, and then I pull you in to sort of understand, to try and get the rest of the partnership on board, you've only going to have an hour or something. Yep. And so you almost got to kind of cut right to what's going to get you excited. And, and while we have a lot of mutual respect for one another. And if I say something's exciting, Pascale's going to take the meeting and vice versa. Getting her excited about your opportunity without having spent the amount of time maybe that I have, you just want to be really succinct, right? About, you really getting to it. And that's part of the coaching process too, in terms of like, what's going to resonate from the partnership standpoint. And I tell you, as founders, if the partner that's bringing you in front of the partnership doesn't coach you, I think you could. That's a fair game question to ask, right? Like, hey, what resonates well with the partnership? Like, what advice would you give me? And just, I think, put that out on the open, right?
Absolutely.
Yeah.
I mean, most of the time, you already kind of know the pushback you're going to expect from the partnership. It's probably been discussed the week prior or the days prior. And so you kind of want to prepare the entrepreneur a little bit. So if your champion within the firm really does a good job, they will tell you, this is what we think, there's going to be some tough questions. You should get ready for that. Maybe, pull the financials in the middle of the pitch because I got questions on like your burn or your gross margin. Let's have you kind of tackle that instead of like doing your regular pitch and then, waste some time of having, the partners and the rest of the team asking you these tough questions at the end. Let's tackle that right away. So that's kind of the giving you a heads up on where is the partnership kind of like asking, wondering like what's going on with your business.
Yeah, and so I mean, in terms of that process, then, so we go in front of the, I'm trying to think, you go, in terms of a founder perspective, you go in front of the partnership, and then, usually then there's still a couple of questions that we get back, right, from the team that throw back to us to say, hey, I'm concerned about, like you're just saying, like gross margin maybe, or I'm concerned about a growth, and that usually then drives some additional questions because the whole point, at least the way I kind of think about it as the partnership, is, we push each other to like see things that maybe are blind spots, things that we wouldn't maybe otherwise see, or things that we miss. Like sometimes I know what happens to me. I get excited about an opportunity. I meet a founder. I love the story, and I want to believe. And then sometimes I can, maybe I'm not looking at something that I should be. Subconsciously, and then the partnership, that's kind of the role of the partnership, right? Is to press on those things.
And that's what it's called. We're all called partners. Is like we help each other see what the other one doesn't see. Sometimes you're blindsided, you're so excited, but you completely missed XYZ risk or threat or competition. And so we're kind of reminding each other, hey, that sounds great. Like, have you looked at that? Have you looked at this? And I think that's great, and that's why partnerships work.
Right. Well, yeah. I mean, and that reminds me. I mean, you think about when we talk. I think about these partner meetings that we have, where we'll bring up a company, and someone else in the partnership that hasn't even met them will say, "I know so and so," or "I know this company that's similar to them," and that collective wisdom and knowledge base that we have as a group is what definitely helps drive us to make more informed decisions, probably better decisions too. We don't at the same time, we're not making unanimous partnership decisions about what we're going to invest in. Maybe that's a good thing to sort of like just touch it, because it's like, it's so confusing. Like, how do you vote? How do you make that decision?
Yes. That's a very good point. I think, 5 years in the firm, Ryan started the firm over 20 years ago. For our part, I was surprised to feel like, as I would call that myself a junior partner, being able to feel like the rest of the team is supporting me. The question that are being asked are not questions to dismiss my passion or try to get me to not invest, are questions I get to make sure that the money we're going to invest in your business actually is going to return more money. Right. And it's once you get some experience in the VC world, like myself, then you get to a point where when you feel very strongly about a company and maybe somebody else in the partnership doesn't, but is supportive. So they're going to ask me the tough questions. I will answer with a lot of sincerity. I would make a lot of calls, try to answer that question, but a lot of questions cannot always be answered, right? But I will do as much as I can, as much homework as I can to kind of like think through that potential threat for the business, that potential question on the future of the business. And usually, I can go across the finish line and make that investment.
It's amazing, I think, at Storm that, we don't have a voting system at our part. And I would tell you, every partnership's probably going to be a little bit different in terms of how these decisions are made. One of the things, we're a relatively small fund. We just closed a $200 million Fund 7. And one of the luxuries of having a relatively small partnership, not to mention we don't have any politics really internally, but we also don't have to have these kind of complex decision-making mechanisms or voting or whatever. But we don't at the same time make decisions by consensus. So one of the things I think that's really, challenging, as a partner at a firm is, at least at Storm, is, when you present an opportunity like we were just talking about, you're constantly getting challenged on things that maybe you didn't see or recognize, and it feels a little lonely. Actually, at least it does to me. Even after 22 years, it feels a little lonely sometimes making an investment, because you do want each partner to have accountability. And I think this is important for founders and entrepreneurs that are raising money. Whoever that person is that's going to be writing the check, I mean, they're really your champion, and they're the ones who are kind of carry you through, and it's kind of going on their permanent record, so to speak. Yeah. And so it's kind of important to understand that, because I don't know of any firm that makes kind of group decisions around how they're going to invest, because that group mentality usually leads to bad investment outcomes. So there is this kind of individual accountability, but we kind of have this balance at Storm where we want to also make sure when we do invest that the whole team is behind the investment. In fact, in terms of process, we all sign the check effectively.
That's right.
When we invest, because we want to make sure it's not like Pascale's deal or Ryan's deal. We all want to be, in it together and be supportive, because once we invest, our economics are tied together, and we're all in it. We're in it together. So then we want to make everybody successful.
And I think it definitely helps that we're a smaller team. And again, I think it's very specific to Storm Ventures. Small investment team, decisions are made faster.
Yeah.
All right. So we talked about customer call, backdoor customer calls. We talked about financials.
Mm-hmm.
We talked about the partnership meeting on Monday. And so what else? So we have the reference calls. So when a reference call is asked to you, it's usually somebody you want to talk to who's known you, maybe an ex-mentor or a mentor, an ex-boss, an ex-coworker. And that reference call is really about trying to understand who you are as an individual. What is, your personality? What drives you? How do you react in a team? How do you take leadership? What is your style, your management style? And you probably heard that before too, is are you coachable? And that's also a lot of VC are trying to diligence for that. Do you take a feedback? Do you follow, not directions, but do you take advice? Do you have an open mind when it comes to growing a company? And that's really what reference calls are for. Like customer call though, whoever we know in common with you on LinkedIn that you haven't mentioned, we might hit them up, give them a call, and try to really understand if whatever we've heard from the reference you mentioned to us also adds up with maybe other people we know in common with you.
Yeah, and I'd actually, to touch on the references, that may not be totally obvious. That I think sometimes at the seed stage, when it's really early and you're only raising a bit of money, a couple $100,000, it's a substantial amount of money, but it's not, millions and millions of dollars. I think people are willing to take a lot more risk, and references may be harder to get. You may not have been a CEO before, which is certainly not a requirement to raise any money at all. But as you get to the A round and maybe even the B round, before the business has really blossomed and you're raising bigger rounds, I think those references become more important, because you're kind of entering a new phase in terms of really building the business where, people want to have confidence in sort of how an entrepreneur is going to be thinking about scaling, and how they're going to be treating their people, and how they're going to be thinking about culture. Because, culture is just, it's so critical to building. It's critical at Storm. Maybe that's a topic for another video, but culture is so important that, we really want to try to understand, what kind of business this person is going to bring. And when I say culture and the entrepreneur, I don't mean that there's a right and a wrong, because that's certainly not true. There's lots of different ways to build lots of amazing businesses with different styles and strategies. And I think at Storm, we try to adapt to the founder and the entrepreneur, rather than being prescriptive and saying, you've got to go do it this way. But we do want to know that people are, coachable. We want to know that, we're going to be partners with a founder going forward. That's probably the best way to kind of describe it, right? That they're going to be willing to work with us going forward, and
for a long time.
For a long time. A long time. That's right. And there's a company, I think I've done a video on, a Splashtop. I've been on the board there for 17 years. So, you can end up working with people for a very long time.
Absolutely.
Yeah. And one of the things that the pandemic really wrecked was our ability to spend time with people, right? Before we invest.
Yeah, we usually like even like having a dinner, in-person dinner with an entrepreneur we're thinking of backing tells a lot. How you behave with the staff, how you talk to the waitress, like how do you, I don't know, like those are small details that are very, very meaningful for us that we like to pick on, and just making sure that who we're going to spend a long time with in the future is somebody we align values with and feel like we share ethics and feel confident that we can grow a team in a healthy culture, retain talents, and be able to get to that category leader that we talk about a lot at Storm Ventures.
And I mean, the flip side's true too for founders and entrepreneurs. I mean, using that opportunity of like FaceTime and even referencing venture investors with other companies that we've invested in and understanding what our style is and making sure that you feel comfortable that it's gonna, match with your style. It's definitely a two-way street. I tell founders all the time, you should exercise us in the process with questions, challenges to the business, which are good kind of early ways to understand how we're going to want to interact and talk about. I mean, because some investors are going to be more prescriptive and be more like, this is absolutely what you should do. Others are going to be maybe more consultative. There's going to be some that have, a ton of domain expertise. There's going to be some that are more financially minded. All those styles can work. It's really a question for you as a founder entrepreneur, what's going to work best with you and what are you most comfortable with? Because as Pascale just said, I mean, it's a long relationship. Yeah. And it definitely should be a two-way street.
That's right. Okay. And so what have we not talked about? So the question we get to is when we get closer to the term sheet. So we've done all the call, reference call, customer call, partnership, everything adds up, we're happy, we want to move forward. Then we're probably going to start trying to get a sense of the valuation and, before giving the term sheets. And that's probably going to be a back and forth before, we go ahead and send you the email with the attachment where you're going to get all the good stuff that is in the term sheet. And so usually, it's probably going to be tiptoeing around what was your last valuation if you raise a seed, trying to understand what the market is like, and what's the multiple, and then try to together kind of get to a point where we don't want to offend you, but we also don't want, once upon a time it was 100x of the ARR. So that's where the back and forth is going to happen. And I think, and then I think you at some point you'll get a term sheet. So
you may need to pull on a couple of things. So it's a great point about when we ask about what your last valuation was, it's an important, in a cap table, it's important for us to understand because we don't want to, we want to make it work for everybody. We want everybody to be happy, and understanding where your last valuation was and what that cap table looks like in terms of ownership is really important. Mm-hmm. Sometimes we'll look at a cap table, hopefully early in the process, but sometimes it happens, later than we'd like. And ownership is just wildly skewed, or maybe there's a founder that owned half the company that left a year ago. I mean, those are challenges that, we want to understand, and it speaks to kind of valuation and, what we need to think about there. And I think valuation for us has a lot to do about thinking about subsequent rounds and us really generating the investment return that we're trying to underwrite our deals to. And it's not us trying to take advantage or, flatten entrepreneurs. It just has to do with, I think what we believe the opportunity set looks like and, what we're comfortable doing. We often talk about internally, we want to really believe, for example, I don't think we're unique here. We want to believe that whatever money we're going to invest at whatever valuation, that when you're going to go out and raise again in 12 to 18 months, that you're going to be able to raise it 2 to 3 times where we invested. Because there's a lot of risk that we're going to take with that capital, and we want to believe that you're going to be able to grow the business and then, garner that interest for that subsequent round. And if the valuation's too high,
you can't grow in that valuation.
You can't grow in. And I mean, especially now with what's happened in the market, I mean, it's just, it presents not only a massive risk to us in our investment, but honestly, it's for the founders, it's, it's tough because nobody wants to do a down round.
Absolutely. Yeah. If you can grow in that valuation, down round, flat round, disappointments, stress. So
yeah. So that's a good points on valuation and turnover, and that is, I think, oftentimes people think that we're negotiating on when we're asking questions about valuation, and eventually it is a negotiation, and there's no hiding from that. It's probably the part I like least about the whole process, because it's really when we're investing in, especially around valuation, it's really the one and only time that we're sitting on the opposite side of the table from the founders that we work with. At least mentally, that's how I sort of think about it. And so it's awkward for us too, or at least for me. It's not the part of the process that I enjoy the most. But having transparency in the numbers and being clear about it, I think will drive the best process. When people play, the other example, and I know this has happened to you too, when people play games with like valuation and are kind of trying to hide the ball and don't want to really be forthcoming, it makes it tough on it. It just makes it tough, because it makes us less confident about really what will work, what we're willing to do. And certainly, from going back to what we were talking about from a partnership standpoint, when we talk about, everybody understands the numbers. The other thing everybody in the partnership understands is valuation, right? And those high order. So that's a very quick way for a partnership to really gun down a deal too. In fact, I'd probably say it's probably the number one reason is if, valuation expectations are so high, even if the business looks great, it can be really hard for the partnership to get excited about it, just because it's so far out of bounds.
Yeah, it can even almost make us question a little bit of like the leader, like is he being realistic? Like,
right.
Is it, it's
right. How will that translate to like other
exactly.
business decisions and
business decision, the future of the relationship, the transparency as we move forward in the deal and become partner, like what's going to happen, right? So we're not saying don't try to get a high valuation. It's more like, let's try to be realistic, align with the markets, fair, and
just do business. I mean, it's just do business. And if we don't agree and see eye to eye, ultimately on a valuation, no harm, no foul. It's certainly not personal, and it's just business. But I think, like you were saying, it reveals other things sometimes about the founder when they're kind of going through that. And in an entrepreneur's defense, it's hard because it's not something that a founder does day in and day out. And Pascale and I have the advantage of this is what we do. This is what we do for a living, and so it's easier on us. But I can tell you from a Storm standpoint, we don't try to have those valuation conversations where we're trying to put entrepreneurs at a disadvantage. We're not trying to take that knowledge we have and put people on their back foot. Because ultimately, I think when we finally talk about valuation, I mean, we're serious about investing.
Exactly.
I mean, at least
and it's in our best advantage that everybody around the table is happy.
Right.
Like, you don't want to enter a 15-year relationship with somebody
that's angry.
I got taken
advantage of.
Yeah, exactly.
Yeah.
So it's absolutely not the intent. Yeah. The intent is really like to make it fair, to make it like everybody feels like it's gonna work. It's everybody's kind of happy. That's the goal.
Yeah, and I think that's really the last step, really. Yeah. And then, the term sheets these days, they're very simple in terms of the process. I mean, especially where we invest, there's really not a whole lot to it. And I've done other videos on terms and a term sheet, so we don't need to get into that now. But that really is the last kind of point in the process. And although that's not when the money gets wired to your account, right. Because we still have to put the legal documents together, the term sheet really is, I mean, that's the business agreement. And that term sheet really is the point at which then, we've got a handshake on getting something done, and the partnership's in line, and then it's really just driving to close. Thank you everyone for listening and watching this. It was fun kind of riffing back and forth. It was a little different. Let us know what you thought in the comments and questions. Follow up with us and let us know. Well, hopefully we'll do more of this to try and, again, give you more insights and knowledge from, kind of from our point of view as you all try to go build, your business. Please hit the subscribe button, hit the like, and thanks again for watching. We'll see you next time.